If you've been following the San Diego housing market, you probably think it's a kind of a replay of just a couple of years ago, but it's not quite actually what's going on. Let's break it down though. I'm Nick with the Iannitti Group. Want to come at you with a real quick housing update here for San Diego in July. Figure this is a good time to do a kind of a mid-year review. The good news is the housing market is definitely normalizing after kind of what I term the unicorn years. We're seeing a return of seasonality and prices are definitely rebounding. As far as the reality check aspect, though, homeowners still have limited options between rates and inventory. New listings are still declining, especially San Diego. It's not good. Affordability remains the primary challenge, both in home prices and in the cost of obtaining a mortgage. As far as the outlook, though, new construction is definitely growing. That's good. And we're expecting a moderately active summer season. So looking at buyer demand, keep in mind that half of all buyers now are first-time buyers, right? This is a Freddie Mac survey done in May, where basically 18% of the people said that they are likely to buy a home in the next 6 months. Keep in mind, this number is historically about 8 to 10%, so definitely good. And I think what's happening is we're seeing a lot of people basically getting their head around the fact that their mortgage rate's now going to be somewhere in the sixes, okay? At least we've seen some stability across the board, which has basically brought back buyer confidence, okay? As far as, inventory, though, this is, a little bit counterintuitive, right? Supply is improving, but it remains limited. What does that actually mean? Well, a couple of different things, right? When we look at months worth of inventory, remember 6 months of inventory is a healthy market. Nationwide, we're about 3 months of inventory. San Diego, we're only at 2 months of inventory. So that's definitely an issue, but we're also seeing active listings growing, right? So what does that mean? Well, things are taking a little bit longer to sell, so we're seeing more standing inventory, essentially, okay? Realtor.com, though, said in the final week of June, they noted that inventory actually declined on a year-over-year basis for the first time since last April. This substantial slowdown was primarily driven by fewer potential sellers opting to list their home. That's really what's going on. And when we look at it like this is active listings, right? In the blue, or what you want, if you want to call that standing inventory, that's fine. And then new listings basically are in the green. So if you look at the beginning of last year, new listings and active listings are really pretty closely related normally in most markets. When we get halfway through the year, though, that's when we start to see this big disparity. We see things on the market longer, and we see far less new homes coming to market, okay? Graphically, it looks like this. This is basically 2023 here, this blue line. So definitely way down. And this is something that we're seeing basically nationwide, okay? Now, a lot of experts have been talking lately, and they think that the lack of sellers coming to the market reflects basically their lack of confidence in the market, right? They don't think that there's enough buyers out there, rates are, whatever it is, days on market are growing. I don't think that's the case. I don't think this is actually market driven as far as what's happening in the housing market, especially when you look at it, it's basically pretty much 99% of the top 200 metros. It's everywhere. I think what we're really seeing is we have a lot of buyers, or I'm sorry, a lot of sellers that basically either they bought their home recently or they were able to refinance their current home, and they're probably at a mortgage rate of somewhere around like 3%. And now if they go out and buy something new, that mortgage rate is going to double on them. That is not a really good scenario for a lot of people, especially when you consider older folks that are basically getting towards these retirement years. And what they typically try and do whenever you're approaching retirement is you typically tend to downsize. You don't need a house as big anymore. But also what you try and do is you're really trying to downsize your monthly expenses, right? You're basically getting ready for heading into retirement and basically living on some type of fixed income, for lack of a better term, just in the fact that you're not going out and still earning more money. But when you consider someone that is looking at the situation where they could downsize the size of their home by about 30%, they could reduce the purchase price by about 30%, and their mortgage rate is essentially going to stay the same as what they're paying right now, that is not very enticing for people to move. And I think that's what we're actually seeing. So right here, this is Mark Flaring, chief economist, First American. History has shown higher rates may take the steam out of rising prices, but it doesn't necessarily cause them to collapse entirely. That's what we're seeing right now, especially in San Diego. The demand for homes continues to outpace supply, keeping pressure on home prices. That's what we're seeing, right? Home prices are rebounding, and it looks like this. This right here is where rates went up last year, right? And everyone thought that prices would continue to come down. And then all of a sudden we get into this year and surprise, surprise, things are starting to go back up, right? That's basically just due to our demographics. Our population is not shrinking and we just don't have the inventory to satisfy the demand, simple supply and demand, right? Doug Duncan, Senior VP and Chief Economist for Fannie Mae, basically said housing prices continue to show stronger growth than was previously expected. Housing performance is a testimony to the strength of the demographic related demand, even in the face of baby boomers aging in place and Gen Xers who locked at historically low rate. That's what I was just talking about, both of which have helped the housing supply basically stay historically low. Home builders are adding inventory, that's great. And they do expect that housing will be supportive of the overall economy. So looking at the San Diego numbers, keep in mind that this is all of San Diego County. These are median numbers, so the true middle, and they're for all housing types. So everything, single family homes, townhomes, condos, everything mixed together. And these percentages are year over year percentages, right? Remember, everything above the line are lagging indicators telling us where the market's been. Everything below the line are our leading indicators telling us where the market's going. So in a snapshot, we see a lot of green up here. That's pretty good, right? The median sales price was up a little bit. Active days on market was flat at 11 days. Price per square foot's up a little bit. Months worth of inventory, still only 2 months of inventory. Remember, we need 6 months of inventory. That is what's keeping these numbers positive right now. Even though that's a 25% increase in inventory, it's still not enough to move the needle. And the real problem is this number right here, these new listings down 36%. This is what I was talking about people not wanting to come on the market because basically they're considering, is a move absolutely necessary? Wanting to move, wanting a new house, wanting a bigger kitchen, those are different things than actually needing to move. And I think when people weigh those two things and what they're looking at as far as the associated costs, that's probably what is limiting people from coming to the market. So if you have a question about what's going on in your neighborhood, keep in mind, San Diego is a microcosm of a lot of mini kind of markets, so to speak. What's happening in Point Loma is not what's happening up in Rancho Bernardo. It's not what's happening in Cardiff or somewhere else. So if you have questions about what's happening in your neighborhood, what is your home worth, this is a good time for you to buy and sell. Just reach out. I'm more than happy to answer any questions that you have. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.